Joining us right now is the founder of CAZ Investments. He's the chairman and CIO, Christopher Zook. Christopher, good to have you on the program this morning. Thanks so much for joining us.
Glad to be here. Thanks for having me.
So first, your reaction to these big two downers, these losers for Softbank. WeWork, pretty dramatic, and of course Uber as well.
Yeah, it's one of those things. They got a little bit too big for their britches, and what we've seen is a little bit of a dose of reality come back into the world. WeWork was a difficult business model from the beginning because it really didn't have a lot of moat. Uber is a great business model, but it's clearly a little bit of a developmental phase company, and they're going to be very successful long term, but they got a lot of headwinds right now with the lockup coming off, and obviously earnings were good but not great.
Christopher, Bob Nardelli here. Do you think that if it's possible, people will start pulling their money out of Softbank based on these? I mean, these are two big mistakes, two big blunders, and really shakes the confidence of the investors in Softbank.
It does, but, this is a company that has a long history of a lot of success. So, is this a stub of their toe? Absolutely. Will some investors look at it, from a little bit more of a short-sighted view? Absolutely. But, they've proven their ability to do very well over time. And so I think the vast majority of investors have a longer-term horizon and will look past a couple of mistakes and the overall bigger picture of success.
Christopher, how are you doing? This is Jack Brewer. Do you think that this will be the case for other banks, as you look kind of across the financial industry? Do you think this is a broader concern, or is this something that's more of a one-off?
I think it's more of a one-off. I think that the industry as a whole is subject to, a little bit of a reality check. I think we've gotten that here over the last 6 months or so. And I think what will happen is that is good actually for investors long term. I think it's good for companies that are seeking capital. I think it's something to where we rationalize the behavior a little bit, because ultimately we still are changing dramatically as a culture, and the technology revolution is not going away. And so as a result, I think long term this is a good hiccup in the path to a very good long-term result.
So, Christopher, you've got, 3 decades of experience investing in alternatives and traditional investments. Tell us how you're investing at CAZ. What is CAZ, and how are you allocating capital right now?
So we're basically investors of our own money, and then we find what we want to do, and then we'll open it up to other people to come alongside of us. Right now, it's very difficult to get excited about the public market simply because of valuation. That said, this tape is very strong, and the old adage of don't fight the tape does hold true. So, this market wants to go higher. I think there will be sectors that do well, but for the most part, we see opportunities in basically long-term thematic opportunities, such as the growth of private equity as an asset class, the transportation revolution, and then disruptive technology. Most of the time, it's better to participate in those in the private markets than in the public markets, but we are seeing opportunities in both places.
All right, we will leave it there. Christopher, good to have you this morning. Thank you.